Hi, welcome. Yes, this is Mary Ellen McGonagle, founder of MEM Investment Research. And today we are going to be talking about market momentum as well as individual stock momentum. I'm going to be sharing with you a number of key critical components when you are looking at momentum as a guide for your investing. So as we move through, I did want to share with you my many years of experience. I did start on the trading floor at Goldman Sachs. That was many years ago. From there, I did go on to manage over $2 billion in assets. And as it relates to equities, things got really exciting for me when I joined William O'Neill and Company out here in Los Angeles. I worked with top fund managers around the globe, teaching them O'Neill's proprietary momentum system. And my work is all about that. And since then, I have founded my own investment research firm. I put out a twice weekly top performing newsletter, my MEM Edge report. I do also have a weekly show at stockcharts.com as well. And I am also introducing a 5-part course, how to uncover big winning stocks. So let's go ahead and jump right in and talk about why momentum works. And these are going to be some of the key components that we are going to be looking at as well. First is institutional accumulation and distribution. This is all about the fact that institutional money, those big hedge funds, those mutual funds, they incorporate their work is displayed on those charts. About 85% of that volume, particularly on bigger, more liquid names, is going to be these institutions. So you do want to pay attention to that volume. These are the guys that are making these charts. Also, momentum works because of repeatable human behavior, and that's what charts are all about as well. When we look at a chart, it is really seeing that human behavior, fear, greed, and other different emotions. Also, strong fundamentals are going to be a big driver of these trends that we see. So that's another reason that momentum is so powerful. And then supply and demand dynamics. We're going to take a look at that and how you can very quickly assess that on your chart. And historical consistency across market cycles. And this is, again, talking about that repeatable human behavior. There are certain drivers to the markets, and they've worked again and again. For those of you not familiar, Bill O'Neill's study, and his work went back over 100 years. He was studying prior market cycles, and again, these same repeatable patterns were coming to the forefront, and then hence a system was built around that, and still very, very applicable today. So when we talk about momentum, what exactly is it? It's going to be measured by taking a look at price differences over a fixed period of time. So this will become evident when we look at some of these indicators that are really important for looking at momentum. Also, there are 3 types of momentum. There's price momentum, that's going to be based purely on the price action and then the direction of that trend. It's going to focus on stocks that are making new highs, and then also or if they are in a sustained uptrend. So that's price momentum. You also can take a look at what is called earnings momentum, a critical component in uncovering these stocks that go on to far outpace the broader markets. You're going to be focusing on stocks that have earnings and sales that are growing. You want to see those earnings, and in particular sales growth, that in turn drives earnings higher. And then there's what is called relative momentum, and that is when you key in on stocks in a particular sector or against the overall broad market. We're going to take a look at a sector that very recently or fairly recently had a nice uptrend and is now trading higher. And then from there, how you can uncover a leading stock using that relative momentum as one of the key components. So again, key indicators for market for momentum trading is going to be that relative strength, the relative strength of your particular stock versus the broader markets. And then also you're going to want to pay attention to the moving averages. I use a 10, 21, and 50-day moving average on my daily price charts. The other key indicators are going to be your MACD, that's that moving average, convergence, divergence, and RSI, relative strength indicator. These are going to be your confirming indicators. And then, as always, you're going to want to pay attention to the volume. Is the volume high? Is it confirming that demand is in place, that those institutions are in there buying that particular stock? So here we are with a quick view of these momentum indicators, the RSI, MACD, and simple moving averages. We are going to get more into that when we take a look at some of these individual stocks. And then also, as we move through, we are taking a look here at some of the most widely used chart patterns. And these patterns are going to be another key component as far as identifying stocks where that trend and that momentum, in this case, has shifted to the upside. So as it relates to the fundamental information, critical again is going to be the earnings, sales. Now you can also take a look at cash flow and profit margins, but those are going to be secondary. It is going to be primarily earnings and sales that you will want to key in on. Beyond those particular indicators and having the key momentum indicators, you will want to have a solid system that's going to tell you where the markets stand. Are we in an uptrend? Are we in a sideways choppy base building period, or has the market turned lower? And this is going to be the most critical component of your decision making. You want to make sure that the markets are in a nice confirmed uptrend if you are of a mind to put your money to work. And then likewise, when the markets falter, be sure and take your profits. Or for those of you that are longer term in your investment horizon, oftentimes you can stay with your stock if you have that stomach. We're going back here to that bear market period, February into April, and this is the S&P 500 index, a daily chart. And we did experience a 21% loss in the overall index, and a number of stocks, I believe semiconductors were down maybe 38%. So we did see quite a bit of damage there. You will want to, again, have that system. This was a period when we were thinning out our buy list, and then as the markets entered into a downtrend, and that was signaled by a close below that 50-day simple moving average coupled with a negative RSI. And then when you begin to see these leadership names roll over, that's going to be another signal that we are in fact potentially headed for more downside. And relative to uncovering when the markets turned bullish again, I'm using what's called I do use what's called a follow-through day system, another O'Neill methodology, again, developed after many, many years of looking at these bear markets and the common characteristics when we come out of that bear market. I won't get into it's very, very simple, but you can look that up, follow through day, and you will have now a system should we enter into a bear market, hopefully not anytime soon, but there are very key steps, and that follow-through day took place toward the end of April of this year. So in addition to having those indicators where we did have a rally on volume higher than the prior day within 4 days of a new bottom and so on, we also had news, and that's going to be a component that you will want to keep in mind. So when we were coming out of this bear market, it was all about the US-China tariff tensions were easing. So we had a nice sound reason that supported the technical price action that in fact the markets had bottomed. And then we can take a look at where we are now with the markets, and we have regained our uptrend here after closing back above these moving averages, we have a bullish RSI, and that MACD is just dipping into positive territory. It's not a powerful new uptrend. However, it is certainly more positive than we were late last month when we closed below that 50-day with negative momentum indicators. So let's go ahead from here and take a look at some of these other signals that can really be quite powerful as far as signaling that the momentum has shifted. We're taking a look at Microsoft, and it's taking us to the end of 2025. But the period that I did want to highlight was coming out of this bear market. This is that late April period. I talked about signals using these technical indicators. So first up here is that relative strength indicator. And again, these are the 5 signals that it's time to get into a stock, that it has shifted into an uptrend. The momentum is now to the upside for Microsoft. So you can see that RSI did get into positive territory, begin to trend higher. Number 2, and secondarily, we had that MACD. We already had that bullish crossover, black line up through the red and then in positive territory. And on that third key signal, we talked about using these moving averages to guide you as it relates to the momentum for a stock, whether it's to the upside or not. And this case, Microsoft did close back above its 50-day simple moving average. Take a look at that high volume. I talked about using volume as your guide. In this case, this is to the upside. We're going to take a look at examples to the downside as well. But number 4 is the heavy volume on that gap up. The stock gapped up back above this blue 200-day simple moving average, heavy volume, and take a look. It did take place on strong earnings. That was that fundamental side that I was talking about. And you're not always going to get 5 signals flashing at the same time. Instead, oftentimes you only really need to see 2 to at least get you interested. And then as those signals continue to flash, you can, of course, turn more constructive. It's really a good idea to enter your positions if it's not as pronounced as where you're seeing these 5 signals within a 1-week period. You are well served oftentimes to enter your position slowly, make sure that this gap up holds, that the broader markets remain in an uptrend, and then add to your position as that momentum continues to be constructive. So quite the opposite here. We're taking a look at when the momentum very clearly shifts to the downside. And this is Hovnanium, HOV. It is a housing stock. And I'm taking us back to the end of 2024 into the beginning of this year. Now let's take a look at the momentum really had already shifted to the downside, but we can take a look at this very brief downtrend reversal attempt at the end of November as an example of why you would not necessarily want to jump in immediately. You will want the stock to prove itself. So we had that 1 day back above the 50-day. It did not close in the upper portion of its trading range on the day, and then it did base build before faltering. So again, highlighting that you will want to ease into particularly some of these faster moving stocks, particularly technology. So here we are with the breakdown of the stock. It closed back below these key moving averages. We did get that high volume that I talked about. That RSI turned negative, and then we had that MACD negative crossover. That's that black line down through the red, and you can see as the stock continued to descend, it did in fact trend below these downward trending moving averages. We also had that RSI remaining in negative territory, confirming what you are seeing is that the downtrend was very firmly in place. MACD remained in negative territory, so certainly you would not want to be involved. Here's another downtrend reversal attempt in May, and by then the markets had turned positive, so it wouldn't be overly surprising that the housing stocks interest rates were going lower, and we did have a downtrend reversal attempt, but again, it did falter. And oftentimes when you see base breakouts falter or downtrend reversals, they will do so very quickly. So that's the good news if you haven't fully put your entire position in play. But here we are with this reversal not taking shape. We had a big drop back below these moving averages, that RSI trending back into negative territory, and that is a prime example of what to be on the lookout for. And certainly those of you that utilize options can take advantage of stocks that very firmly enter into downtrends, or even, of course, shorting stocks. So let's take a look from here at a momentum shift that takes us in two different directions. First, we do get that nice uptrend. This is Asteria Labs, ALAB. It is a name that was on our MEM Edge report. We were able to take advantage of this gap up into a base breakout, a nice healthy uptrend. However, you can see as we move, well, let's go ahead and take a look first here at this back and fill flat base formation and that gap up that took place. It did take place on heavy volume, and then in turn it pushed that MACD black line up through the red. That's a very bullish signal there. We had the RSI trend upward, and the fact that this gap up took place on bullish news. Now, this is not exactly earnings, but oftentimes Wall Street upgrades, particularly if it is a well-held Wall Street firm, one that has certainly, if they have a good reputation for talking about stocks, in this case in technology, some of the major firms, when they come out with upgrades, they will have a little more impact. So we did have that gap up on news into a nice uptrend here, and you can see during this rally phase, we still had that momentum above this net neutral. And we also had that MACD up here above net neutral. Now, you will see negative crossovers with this MACD, but it is not a sell signal. Oftentimes it can simply just be signaling that the stock is in a sideways back and fill period. It's not, again, indicating very clearly that you need to exit. This is just a consolidation phase. But if we move through, take a look at this late September period, and you'll see this selling on very high volume. That negative RSI is going to be very critical. And then we did have a secondary rally attempt. Now, had you stayed with the stock, certainly this break below this key 50-day simple moving average with a negative RSI and the MACD now in negative territory, that's enough by way of negative signals flashing that it is time to exit the stock. And we're talking here about that very high volume. So hopefully you know as far as what these characteristics are when you are looking at or looking for momentum shifts in the stock. And as noted, in addition to taking into account the technicals, you will want to make sure that the broader markets, what the current phase is for that. And then news. We've seen quite a bit of volatility this year, a lot of news centered around whether it's tariff related or policy, Fed monetary policy, and so on. So not to complicate the picture, but you will want to take a minute, and that's something that my MEM Edge report is very, very tuned into. It's something that is touched on with my weekly report on Sunday tends to be a little bit longer. It's going to be more involved. The Wednesday mid-week report will also address the current market conditions, but then from there only talk about names from our buy list that are on the move, whether it's they're breaking out, are they potentially breaking down, and but it does incorporate all of these characteristics, not just the chart. It's going to talk about earnings, talk about that sector, industry group, and then policy that is bigger and can really impact the markets. So I talked about earnings and sales being quite critical, and here we are with APP, app 11, and this is in fact a weekly price chart. So for those of you that are longer term in your investment horizon, you will want to use or certainly have in your tool chest a weekly chart, because the weekly chart is going to provide you with longer term outlook as it relates to the stock. You're not going to be as whipped around, so to speak. You can stay with the stock longer. And so with APP, we are going back to 2023, where we had this bullish downtrend reversal. And then again, just highlighting how important those earnings are when you are looking for these big winners. This is a stock that I did pick up back here and had a wonderful 380% gain, I believe. And it really did take keying in on that weekly chart to stay with the stock. We did have a couple of periods of pullbacks, but again, these earnings are just triple digit, huge, big growth. And then we did get a pullback here. This was on reports of accounting issues. This was part of the MEM Edge report on our buy list. And I did talk about this because the stock, because of its big price movement, it was being targeted by these bearish newsletters, these short sellers, and it was not the first time that there were reports of supposed accounting issues. So just having that in mind, because we did in fact recover from that pullback due to those accounting issues, knowing that those issues had come out in the past, it gave it a little bit less credence. But again, let's go ahead and take a look, because we've been talking about stocks really moving higher. I'm sharing with you some of these bigger movers, and you do want to, when you are trading momentum stocks, they are going to be very fast moving. They're going to be big growers, but they are also, when the markets get into trouble, or if the stock in fact gets into trouble, they do fall faster than the markets as well. So you really have a double-edged sword there, in the sense that you can take advantage of that outperformance to the upside, but you will want to have a system in place so that when things turn, you can note when it's time to, at the very least, take profits. So we're going to talk about essential risk management tools that you will want to have in place. First up is having that stop loss, typically 7 to 10%. It's going to have everything to do with your risk temperament, whether you want to wait for that 10%. There are some that say 6 to 8%. So it's going to be all about your tolerance, but most important is that stop loss, so that you don't incur more than certainly that 10%. That can be very damaging to your investing, your psychological ability or your confidence. So next up is position sizing. So when you are putting together a portfolio, and if it is comprised primarily of momentum stocks, you will want to limit your trade to 2 up to 5% of your portfolio. And you're not, as mentioned before, going to want to jump in at 5%, perhaps you can build your position, or as the stock appreciates, the price appreciates, it may then get up to becoming 5% of your portfolio. But anything more than that, oftentimes you can get caught off guard with that, again, unless you have that confidence and then you have that stop loss in place. And you're going to want to diversify across sectors. If you are heavily weighted, for instance, in technology, and that particular area gets hit within the markets, you'll certainly feel that pain. So again, avoiding over concentration. So if you can move and put your portfolio, broaden out those holdings using trailing stops, and to protect your profits, your stop loss is going to be relative to your entry when you bought the stock, that percent. But as the stock begins to move higher, you can move your stop loss level higher with the stock, but you are going to want to have a system in place to protect your profits. And certainly the golden rule within the process of momentum trading is that you're going to want to cut your losses quickly and let your winners run. That is undeniably a very critical component and part of trading these fast moving stocks. Let's take a look at some common mistakes to avoid. Again, we've been talking a lot about names that have been moving higher and the beauty of that, but you do want to be aware that as far as entries and exits, you want to have a system in place. So these are some of the common mistakes that oftentimes certainly those newer to momentum trading can encounter, and that is chasing a stock after a massive run. You do want to be aware of what stage, as far as a base that is built and an uptrend out of that base, where are we in that uptrend? So we're looking at an example here, and I wanted to share with you this move higher. This particular stock, from the beginning of its uptrend into October, had a 550% advance. I believe this is OKLO, the nuclear power energy provider. And what I wanted to highlight here is when you are if someone were to say you are chasing a stock, some of the key ways that you can uncover that. First up is using this RSI. Once it gets up here above 70, and that's this darker green highlighted area here, that's indicating the stock is overbought. So in other words, particularly up here at 90, you don't want to pile into a stock with that RSI already advanced above net neutral, but now in a very overbought position. So that is certainly one way to note. Also, quite simply, the percent advance coming out of that new uptrend. And then also, as we move through, taking a look at some of these other characteristics, because we did have a secondary move higher, certainly. But from there, once we had that negative MACD crossover, now I talked about that not being a sell signal, more of a signal that this sharp uptrend had reversed, whether it was going to be just a sideways move or downward. Of course, when it first takes place, you will not know, but it's certainly a red flag. It's something to keep in mind. So from there, you will want to follow the progression of the stock. And once that RSI gets into negative territory, coupled with a negative trending MACD, you are well advised to take profits, at least some, and you can see the high volume on that selling relative to any kind of buying taking place. Once we cross below that 50-day with a negative RSI, for sure you want to be out of the stock, and then that MACD in negative territory. So again, you don't want to chase those stocks. You do want to pay attention to volume. Is the higher volume taking place on rally days, or is it selling on high volume? That's going to give you a real good indication as far as the momentum and the sentiment for that stock. And again, you do want to use those stop losses. And then oftentimes you can over trade, and that's going to be all about particularly bullish phases when AI stocks and a lot of the names are still trending higher. You can oftentimes get into a trap where there are just so many names that look constructive. And again, this is where my work with my MEM Edge report is. I hear this quite a bit from subscribers, that it really does thin the crowd out. It's all about having that ability to uncover that winning stock. And it's going to be a lot of the characteristics that we talked about as far as the fundamentals, but then also having a really good sense of what is driving that stock higher. Is it supply demand? Is it tariff related as far as going lower? But those nuances are going to make the difference as far as really being able to capitalize on these momentous moves. And then falling in love with your winners. Perhaps it's a stock that you've owned. We looked at APP, which is back in an uptrend, but because you know the company, you know the way that it trades, oftentimes you can fall in love with your winners and stay too long, stay at the party too long. So that's another common mistake that takes place. And then of course, ignoring those broader market conditions, feeling that you have a stock that is a winner, that's going to be able to withstand downward market pressures. And in fact, when the markets enter a downtrend, and particularly a bear market, pretty much every name is going to get touched to the downside by that. So that's another common mistake that certainly you want to avoid. So we talked about some of these other characteristics. One other note here, when you are using these moving averages, this is a 10-day and then a 21-day, the slope of that moving average is going to have an impact as well. So we're looking at these shorter term moving averages now trending downward as we moved into November. And you can see that instead of acting as support, these downward trending moving averages are now acting as resistance. So any rally attempts are not making it to the upside. They are continuing to trend downward. And when you have that 10-day down through the 21-day, that is known as a death cross. It's a secondary indicator, but it's still one worth noting, because oftentimes you will see a progression, a continued lowering of that moving average. And you can see that that upside resistance very firmly in place. Now we are leveling off a bit here. Another nuance as it relates to these energy, nuclear energy, AI energy related stocks is the fact that OKLO has great systems in place. They have government contracts, a lot of positive news. What they don't have is earnings. And this period here, the end of October into November, the appetite for non-earning AI related stocks dissipated. And that was another characteristic that had us removing the stock from our suggested holdings list. Quite simply, the sentiment for the overall group, also when you marry that with the chart. So little nuances are going to make a difference. So here's a look at Netflix, and I wanted to highlight the fact that oftentimes, or not often, it's actually pretty rare when a company comes in with strong earnings and it sells off. And that is exactly what took place. I'm taking this back to July with Netflix, and the company did come out with numbers that were above estimates. This is where, again, those nuances are going to help you out, because the Wall Street analyst revised their outlook for Netflix going forward. So you had a sentiment shift. So we had this RSI up here in positive territory, and upon the release of earnings, negative sentiment from major Wall Street firms, and that did in fact sway investor sentiment. We had that RSI, so the technicals are going to override, and that is something that I'm sure I'm going to mention again relative to your decision making, so that even though Netflix had great numbers, the fact that the outlook going forward was not that strong did pull the stock back below that 50-day super heavy volume on that selling, and then eventually a negative MACD. So, and again, coming out on that bullish side, when you're looking at these patterns, this is a double bottom formation. And as we emerged out of this double bottom formation here, we did get very heavy volume. So that was quite bullish. You're marrying that with a positive RSI and a positive MACD, and that would take you through this upward trending period here from May into July. Again, earnings and technicals are going to tell the story. Here's a look at Amazon, and it's taking us back to 2023. This is a weekly price chart, and you can see that the weekly chart is going to keep you in a stock, not always.
Hey, Mary Ellen, you've got about 2 minutes to go.
Oh, nuts. I had the wrong time keyed in, and I appreciate that. Okay, let's do this because there are some things that I want to make sure that I cover. And very quickly, we are looking at a chart of healthcare. This is XLV. So we are looking at the healthcare sector, April going into July, and you can see it's not participating in that bull market. This is that relative strength relative to the broader markets. So here we are with a longer term XLV chart, and you can see I am overlaying the S&P 500 on top of it. And again, healthcare just languishing while the broader markets have liftoff. You want to be aware of that relative performance at this time into the end of July. Do not overweight healthcare, but let's take a look at when healthcare had liftoff in the beginning of October. And you can see we had this nice move higher on positive news into a nice uptrend, bullish RSI and MACD. From there, we did with the MEM Edge report, noted that new uptrend in healthcare and added Johnson & Johnson to our suggested holdings list. And talking about using those momentum indicators, one of the reasons was because J&J had been outperforming the healthcare group, and that's going to oftentimes signal its leadership capabilities. When the sector is going down, you have a stock that's edging higher. Once the group turns bullish, you can get into that stock. And again, here's the healthcare group relative to J&J. So this is one of many leadership names that we did take advantage and still are of that move into healthcare. So best idea, and this is going to be all about how they come out with earnings. Snowflake is due to report after the close today, so I am going to need to see strong earnings, but we are entering a potential new uptrend in the stock. And then from here, I do want to share with you a special offer. You can get a free 2-week trial of my twice weekly MEM Edge report. I also put out alert reports as the markets shift. I put out several of them over the last couple of weeks. And again, I would take advantage of this, no obligation, and you can really get behind the scenes and see what's taking shape, really drilling down in these markets. And I believe my time is up.